G'day all, Ben here from East West. Good day to finish off the week for uranium, a nice gappy update. Terrific. So there was a bit of news that came out, obviously about Constellation Energy, which has driven the market. So let's have a look at that news, have a bit of a think about what it means in the bigger picture. We'll have a look at a newcomer to the stock list, and then we will just quickly brush over some of the old favourites to see where we sit. So we talked about this last week. We brushed over this story about Larry Ellison seeing a $100 billion AI boom powered by nuclear energy. So I think you're going to see more of these sort of stories pop up, and they're going to have relevance to nuclear and probably also to copper, because you've still got to take the nuclear power from the plant to the data centers. But these AI data centers, there's no doubt they're on the march. They're going to pop up, and their energy needs are going to have to be met somehow. And so it's proven with this news today, with Microsoft signing the deal with Constellation Energy. Now, this is a Reuters story. Now, I'm going to put links to all these, everything I'm about to show, I'll put links to it all in the description. But as I said last week, when news like this comes out, don't go to nuclear industry-based news sources, because they've got a vested interest in reporting in a certain way. Go to places like Reuters that just report more like the facts and don't put their own slant on it. So please excuse the ads, but there's a couple of things that I as I read through here, this sort of stuff you've got to be a little bit wary of, right? Key regulatory permits for the plant's new life have not been filed, and I also just remain wary. You just got to keep this in mind, that yet to file the application to actually restart at 3 Mile Island. So there's a lot of water to go under the bridge before this Microsoft deal is actually realised. So Microsoft's, as far as I can work out, have just said to Constellation, "Well, yeah, hey, look, if you can get it up and running, we'll buy some energy off you." But they haven't got it up and running yet. And also, probably just got to keep in mind, something like this, where we're talking about, that Constellation hoped it would get federal support, that the same way that the Palisades Nuclear Generating Station did, which got a conditional loan from the Biden administration. Now, of course, we've got an election coming up in November, so the landscape could change. I mean, you can sort of say, oh, well, Trump or the Trump side or the Harris side are pro or whatever nuclear, but we don't know, and until the rubber hits the road, when the deal gets put in front of the government and they either sign off on it or don't. So it still remains a bit of an unknown. So once again, there's another story here from CNBC. It's all saying more or less the same thing, but it's all positive. But like I said, a grain of salt. You've got to take all these things with a grain of salt. But that got me thinking a little bit about maybe different sides of the trade, and just looking at this here, like I said, I'll put this. This is a website called Swing Trade Bot, but I'll put the link for this here. This is also the ETFs that actually hold Constellation Energy in their portfolio. So there's not really a lot here that we usually cover, or that I usually cover. But this one was kind of interesting. The Range Nuclear Renaissance ETF. I mean, it's got nearly 10% of its allocation is to Constellation Energy, and then of course you've got the there's a few here. I don't really know a lot about these, but why I'm showing this is these could be things that you could research, to have a look at, see what's in them, and see if there's anything you can maybe get into a bit early. This one, the Range Nuclear Renaissance Index, I'm going to have a look at that today, because that's kind of interesting. Furthermore, and I will put once again, I'll put the link in the description. But once again, here's just a bunch of the Van Eck uranium and nuclear ETF is another one that I haven't really looked at. But here's another list of things that you might be able to just research. If you haven't already looked at them. Now, the only thing I would say, I'm not recommending any of these, because I don't know enough about them, but liquidity is always at the front of my mind, because if these things get very liquid, the moves can be bad, depending what you're doing, if investing or trading, but it is certainly, the liquidity, the depth of the market is certainly always something to think about. So this will be one I'll certainly have a look at. No, I'm not going to buy a Volvo. This is kind of interesting. This looks a little bit at ground floorish, and it's just cracked through its all-time high. So we will have a little bit of a look at this Range Nuclear Renaissance ETF. It could be one I might put into into the mix. So, these are the sort of things that it's holding. So it has got a big chunk of Constellation energy. So once again, maybe all these aren't necessarily tied. Well, they should be, but these are other sort of things that you might be able to go in and have a look at. Go in and check out for yourself. Maybe just do a little bit of investigation as to what these ETFs are holding and if they're any good. Okay, so there's a little bit of stuff here. Now, the other thing that's interesting here is that they're 51% or 52% of their assets are in the United States. Now, I think that is probably a good thing because the AI boom is America is still the home of innovation, and the AI boom will still be coming out of the States. So the power needs for AI are going to be United States centric. So you probably want out of, say, well, maybe Canada as well, but certainly this is where you want to be thinking about if you're trying to play the nuclear/AI game. Just looking here at this Range Nuclear Renaissance Index ETF. Now I'm going to have to find a nickname for that. It looks like it's got the code NUKZ, so I might just call it that because it's going to be too much of a mouthful for me trying to say Range Nuclear Renaissance Index ETF every single time. Now, this is kind of interesting, right? This is new. This has only come on this year. So, word of warning, once again, I would be investigating any sort of liquidity with this before I actually participated in it. And this is kind of a bit telltale. These massive spikes like this, today was obviously pretty good because it's got a big exposure to Constellation. So you want to see like a bit more. Some of this trading volume might be pretty low. Well, it is pretty low, but these big spiky sort of volume candles like this, to me, that just sort of screams a little bit of there could be some liquidity issues here. So I think that's just something you've got to keep in mind. But this is the 50-period moving average of the volume. So as this creeps up and these candles start to get more and more towards, you want multiple touches on the moving average of the volume the volume moving average line as it creeps up, because it means that there's more getting transacted every day and the market's getting a little bit deeper. But nonetheless, this is kind of interesting. So you can just do a bit of classical tech 101 on this. So here's the low, here's the high. Where do we go? The reason that I always look at these fibs is because that's just it happens time and again that the markets return to this area. They either get a very precise touch on them, or on the 50 or the 61.8, or they stop in this and then they rally. It just happens so often, and it's not just in nuclear. It's in uranium. It's everywhere. Okay, so that's why I always look at it, because I just see it over and over again. But what's come off this looks very, very impulsive. So again, this time we actually crack through it. Okay, so they don't always hold, but they're always just a point of interest. Okay, but we've gone to and through the measured move target on the way to the second one. Okay, but the point here is that if you're looking at this in an Elliott perspective, you would go, oh, okay, well this looks impulsive. So one. This looks like, getting three waves out of that for a two, who knows? But, there are limits to what Elliott can tell you. We're just looking for repeating behaviors in price. But this sort of strong move like this with gaps in the market is how the textbook, and there's a lot of gaps here, right? There's a gap there. This is daily gaps. There's a gap there. Big gap here. Another big gap today. That is how the textbook describes typical wave 3 action. Powerful, strong, no pullbacks, with gaps left in the market. Okay, as the buyers, the sellers completely evaporate. And all we do now is start projecting, because we're at all-time highs. We don't know, so all we would do is start projecting. So okay, well that would be the type of area I'm just looking for. It doesn't matter I'm actually going to sell out there, or I'm not going to do anything. That just becomes my next point of interest. So we will see. But this might be a different angle. It's not something I really considered because I only sort of cover uranium. But this sort of thing, that's quite a nice looking trend just to start off. So that might be something which bears, warrants some attention. Let's just put it that way. We'll see how this develops. But The point being here is you can see the great reaction from these ETFs that hold companies that might run sort of nuclear power plants. So this is the thing, that the main driver might come from these AI news stories about, that whoever's going to run big data centers, the big places, the Amazons, the Microsofts, there will be more signing deals with nuclear power plants to get power on long-term deals. And this might be where some of the next opportunities lie. So just quickly looking at UIA here, and so some good signs, because we're looking at this downtrend line, and we've kind of broken that now, right? We've got this candle's, I mean, that is classic doji, okay? But it looks like it's almost right in the middle of the range. But we just haven't. Do we double top there? We've double topped to that. So this is what I'd be wary of, right? This is a bit of a sugar hit story, okay? It's a bit of a one-day event. Now, of course we could power up, but you can see where we've just run into this, and this could be a double top, and it might take a little bit longer for this to bust through, or on Monday it could just cap higher like it did here. I mean, it's definitely not impossible, but I would just look at that and go, okay, well look, we've got some competing for, we've defeated this now, okay? So I'll leave this here. The reason being is that this would be just technically, this would be the sort of setup that I'd like to see it, because look, we don't have the trend change yet, because this is a double top. Yeah, technically this isn't a double bottom, but it's pretty damn close, right? So we've got to be mindful that this could be just setting up a range, okay? That could happen, but we will see. What I would like to see in terms of, if I was looking for price to develop, this would be, for me at least, the perfect technical setup would be retesting this trend line from above in the zone, like something like that, and then that would be all time for me. That would be exactly what I'd look for. That would be A grade perfect, because this downtrend line has been pretty good, since July, but the market's ability to retest this, it may not. I mean, I don't think it's going to come back that sharp, but who knows? It could. But yeah, so you can see here that the time factors may not allow for this sort of setup to happen. But that would be A grade. That would be absolutely an A grade setup for me. Wow, imagine that if that intersected. So, that would be the general idea of what I'd be looking for, okay? So it still remains all about whatever pullback through here, and then the ability to take out the top and power through this range. And then what would be the next A-grade setup? Well, then I'd want to see it hit the measured move target, then do another retracement, maybe like that, and then like that. That would be just technical heaven, okay? Almost certainly won't happen like that. But you just lay out the plan, and you see what you would like to see happen, and see if the market gives you something that equates to that. So I'll get rid of this trend channel because it is not really. It's just a hope and aspiration at this stage. The potential range and the downtrend. That's what is important right here and now. But what we've got now is the market has moved above the moving averages. Okay, so we've come above the 50-day moving average with this push. The 200 still remains above. Okay, so there is a little bit more work to do, and you can see how this all goes together. So I would still be expecting, this is a sugar hit, I would still be expecting a retrace at some stage. So it just becomes about, but look, sometimes the retraces are bugger all. Like, look at this retrace. It wasn't that deep at all. I mean, this one didn't even make it to the 38.2 before it powered on, took out the high. So we had the move, the pullback, and then the move. It'll be sharper in a smaller time frame here. Just sharpen this up a little bit. Okay, but this impulsive, and that's an impulsive rip. So, this correction, like a little bear flag, but it couldn't come back and recapture anything, any sort of, I would have thought at least I'd be thinking, okay, well that, can it come back and retest that? Can it come back in and retest in here? It couldn't. Like, the power was in the market to take it even further. So we wait and see, of course. But you can see, the way I've laid it out, you can see what needs to happen, okay, before we can move away from this potential scenario of a range-bound market. Okay, we'll just look at CCJ here as well. So, same sort of thing happening here, right? But a few things different. The only thing different here is that we did come through this top, okay? We did come through and just make a little bit of a fresh high above this pivot high. So, the first thing that I pay attention to is the gap that's been left in the market, okay? Now, I've been over this a lot of times. Gaps in CCJ since 2020, since the COVID low, have tended to get filled. 85% of them being filled in. Okay, these are all the gaps that currently remain unfilled in CCJ. Okay, this is one of them, and this is one of them. And when I'm talking about gaps, I'm talking about bullish gaps. Okay, where the market's gapped higher. These are the two bearish gaps that are yet to be filled in. It looks like this one will. The point being here, right, is that the chances are that this will get filled in, okay? Because this is most likely, as I've said before, this is most likely a sugar hit news story. And this, look, I don't know. Maybe Monday we open here and keep going higher, but I would suspect that we're going to probably cool our jets and come off a little bit here, okay, into next week. And that would be good because you want this gap filled in. You want it out of the way. This remains down here. It's very, very small. This one's big, okay? This is 3.7%. That's quite a big gap. So there wasn't a lot of gaps that were any bigger than that. So the chances are this will get filled in. So what sort of structure do we want to see around this? Well, just looking at the retracements. Okay, so if the market was going to come down and fill this gap, we're talking about the 38.2. I would probably prefer it to come down a little bit further, okay? Just to come down and test this structure out to come here before we power on. That would probably be how I'd prefer it, but that may not be what we get. We might just get that. We might get that. We might get that. I don't know. We'll just have to see on Monday. But we just sort of work out what our idealized scenario would be. And for me, it would be this. Okay, that would be the kind of thing I'd be looking for. So right now, the structure of the trend. Well, it's yeah. Look, that's the trend structure. Okay, so we do have. Only just, but we do have a higher low, and only just we do have a higher high. Now that's not a conclusive trend, is it? You'd still say that was more a range. You want that, right? And we don't have that. We have this. But that's not necessarily a problem because yes, we have held this low and we have come up and made a new high. So, but by the textbook, yeah, we are now in an uptrend. You would just like to see something a little bit more definitive as this goes on. So that would still be what we're looking for. Now, there's a bit to get through here, and it's not a surprise to me that we just kind of stopped here. I know we've got these structure with, it's like a triple bottom, but we've closed on the other side of that triple bottom today, so that's quite good. But coming off the top here, this was the first sort of retracement, okay? We broke through it, so I would use this pivot, okay, looking at the retracements. And when we come down to the low, there we go. We've come right back and touched the 50, which sort of ties into all of this, okay, which we looked at before. And then when we look at the volume that was done from the top to the bottom, of course, we've got a little area of interest in here, which will tie into, of course, this little area of structure. But that will all need to be defeated. So, the expectation is that we will do that. That would be what I would kind of think is the most likely scenario for CCJ moving forward. It's interesting, though, how the top, this flat top of the cloud lines up with the 50, and that's why the overlay is so good, because it just tends to unerringly pick out the important parts of the moves that have just happened, okay? So getting on the other side of this daily cloud, that is good, but turbulence within the cloud. So expect it to be a bit choppy through here, but if we can get on the other side, retest, that is just from this angle is the sort of thing that we want to see. So this is all looking pretty good. But once again, just word of warning, it's a start. Okay, it's not the moonshot. That look, there's going to be a lot of people that tell you, yeah, this is the moonshot. It is part of probably the moonshot that will evolve over the coming weeks, months, and years. All right, but as someone sort of commented. And thank you very much, Robert, for your comments every week. I appreciate them, buddy. Patience. It's going to take patience. Okay, there's going to be a lot of water that's got to go under the bridge before this thing finds its feet, if it does at all. Like I've always said, I don't know what will happen. For all I know, it'll crap right out. Okay, we just don't know. they can restart 3 Mile Island, they can blow up again. Then you've got a problem. So, look, that's we don't base off that. We just let price tell us what it wants to do. And right now, this is all just telling me that this is a good resistance point. We've got a good start. We do have a higher low and a higher high, but we will just need price to develop a little bit further. So I think I'll just leave it there for this week. Short and sweet. I don't think too much more needs to be said. Let's just see what next week brings us. Hopefully we can get above this daily cloud and start to really put some proper sort of trending action in. So that's it. Thanks for watching. See you next time. Bye for now.